All right, what's going on, everybody? We'll give it a few minutes. Let people load on in here. Sound should be good right now. Just gonna wait and confirm. It has a little bit of a lag. Okay, yep, sound is all right. That's good to know. All right, yeah. So I figured I'd pop on here for all the other really cool people like myself who just chill for the most part on Friday nights, not do too much of anything. So see if I can go like this. Yeah, that looks better. Nice. All right, yeah. Oh, cool. What's up, Sean? So yeah, basically what I like to do is on Friday nights when I'm not doing anything to take care of all the prep work going into next week and pretty much just schedule all the tweets for Saturday and Sunday. That way I can chill out and disconnect as much as possible. I think that is beneficial. I do spend a lot of time during the week, whether it's looking at charts or on live sessions or you name it. But a lot of my 5 days during the week is surrounding the market. So when you get the opportunity to disconnect, it is pretty nice. I gotta be honest. So let me just make sure over here we're all set. We're good. Okay, cool. All right. So, anyways, you'll see right now. Going into the week, I like to start on the weekly time frame, and I like to work myself backwards on something that I really like. And if I don't really like it, or maybe I don't feel like it's something that's ready or tradable at the moment, I'll just leave it there. But anyways, just taking a look at Nasdaq, I like to look at Nasdaq first and foremost. It's predominantly what I do trade. Whether it's on futures, of course, but I do like to trade Nasdaq. In the past, I'd been more of an S&P guy, but the reason why this year I've found myself gravitating towards Nasdaq instead of the S&P is realistically just because this year, to me, Nasdaq has totally been the leader, and we'll see it right here, and I'll show you right now. But if you take a look at Nasdaq, look, we ain't at all that far off those all-time highs, right? Whereas if we were to take a look over at ES, there's actually two highs that we kind of have to reclaim prior to getting back to that all-time high. So for that reason, I've felt myself gravitating more towards Nasdaq. I feel like it is totally the leader of the year, and here's my justification. Not only this high do we also have this high and this high, where on Nasdaq you'll notice that we only have this high here and that high here. So to me, that is the driving force as to why I look at Nasdaq first, and specifically tech in that. So but just to take a look, obviously, look, we're pretty close to those all-time highs. If I had to make a wild guess right now, or an educated guess, I guess you could say, I don't think all-time highs are in the cards over the next couple weeks here. I think personally it would make a lot more sense for this year to close out. Here, I'll pull it up right now, but for this yearly candle to paint as an inside candle. So an inside candle would mean that inside this entire year, you will notice that we did not take out the low or the high of the previous year. Typically when that happens, you will notice that explosive moves do occur following that. I am personally going to go out on a limb and say we probably don't take out last year's high. That's just me. We still have a couple weeks left. I could see, realistically another week where we're kind of just chopping around, stalling like we did this week again. And then, I do believe that we will sweep this July high right here. Hold on, let me pull it back up. This one right here. Very, very close, but not quite there. So I think that July high gets swiped at. It's about 155 points away at this point. So I just tweeted about this actually. But when we do sweep that high, that's when I think I'm going to start to look bearish. So Reason being, if you want to, I guess this is a learning thing, but um, when we sweep a high, right, uh, the way that we can look at it is there is liquidity or money resting above this high. Why would I say that? Well, if we go back to these July highs, what had to have happened at this point right here in order to drive price lower? Had to be sellers, right? So sellers, specifically people or institutions, hedge funds, whoever, who have money that can actually drive price or pushing price down from that point, those stop losses are going to be right above, right? They're not going into it without a stop loss with a gross amount of money, enough to move something like NASDAQ. Unfortunately, I can't do that. I'm not sure how many retail traders really can, but so using that idea, when we sweep that high, it'll trigger those orders. And when those orders get triggered, you're going to have an influx in liquidity at that point, right? So, from that point, how I like to play following sweeps of liquidity, I like to wait for the first imbalance to occur following that sweep. So, for example, you can get it'll look like this. Ready? So, you'll have a candle right here where you have an imbalance to the upside. To me, that's offering me some confirmation, or it's the market kind of tipping its hat to me, telling me, hey, look, we're actually going to move higher from this point. But on the flip side of that, if we poke our head above that high and immediately pull back drastically, to me, what that's telling me is, okay, range has been set. Now we look for a discount retracement before looking for higher yet again. So that's my idea here. Um, and really, at this point, we're only what did I say before? 155 points away from completing the Mando model on this particular name. So what the Mando model looks like is I will go from the swing low to the swing high that took out a previous high. So for example, we have these highs taken out here, those highs taken out right here with that price run right here. And that's how I have my fib set, right, from low to high. Now, from this point, I like to wait for some sort of imbalance to occur, or any setup in that. So, for example, it could be a breaker, it could be a order block in that situation. So, in this case, we have a bearish order block that's set up on the weekly time frame, and I'll just show you what or how you can map this out on your chart right there. So what the bearish order block looks like is an up close candle followed by a down close candle that closes below the previous candle's open, previous week's open in this case. So our expectation would be a retracement and bounce back up into that order block and a rejection. So through the first attempt at this, we rejected, headed lower. And with that, our range was set. And now we would wait for a discount bullish imbalance right here specifically. That discount bullish imbalance was tagged and we took off. And I don't know if actually maybe I have it on this. I think it's over on the daily. Let's go over here because I just want to show you the tweet I had put out in that low at that low where I said I like this low a lot. I think we're gonna move higher from this point. Yada yada yada. And there's a reason for it. Um, let's see. Oh, there it is. Cool. Okay, so you'll see that line right there drag me over. So at that point, one day after the low is set, I said I like this low a lot. Golden pocket bullish imbalance, specifically 50% of it. Test on the daily and bounce after taking out the swing low from May 25th. And then I said I liked our first target 14,979, which was this little swing high here. But yes, I mean, the reason why I liked it so much was because if look, we had our range set, we had our retracement down into discount, we had a bullish imbalance right here on the weekly. We also had a bullish breaker right here, which is a low, high, lower low. And upon break of that high, we would look to that level to be viewed at as a support level, which price retraces back down into support and takes off. So that was pretty sweet. That was about 2,300 points. Yeah, 2,300 points ago. Wow. So that was cool, and it feels great being on sides. Even if you're not swinging something, if you have a good idea of what the draw on liquidity is, or where the market is likely to go, To me, it just makes trading that much easier. Um, so with that being said, ultimately, I think we sweep that high. Early next week? Could it be at the end of next week? Can it be the week after? Yeah. I don't really anticipate us going for that all-time high this year. Maybe to start next year. I don't want to rule that out, but I just think we're working against the clock right now, and to me, it would make a lot more sense if we just had a inside candle form um, on the yearly. Um, so that's Nasdaq. Let me just take a quick little screenshot of this because these are the ones that I'm putting out here on Twitter on over the weekend. So as we go through these, I'm just going to um, you know do the charts that I typically would, and if you guys have any that you want to look at, if you're watching this on Twitter, you can just comment underneath. This tweet, I guess, whatever it's called now, X. And if you're watching on YouTube, you can just comment on YouTube what ticker you want to look at. So, but first and foremost, that is NASDAQ right there. So now we'll slide on over. There are actually a bunch of requests also that I'm probably going to get to towards the end, but let's see what else we have. So let's go over to ES. Very similar, but again, we mentioned this before that um, on ES we actually have another high. It's not just the two that Nasdaq has; it's the three. So with that being said, that just leads me to believe that ES is the lagger in this situation. But if we zoom in closely and we take a look at this weekly close right here, we'll notice that previous resistance or a previous bearish imbalance that occurred on the weekly time frame right here. This dates back to July. Price retraced lower, took out this low, shifting market structure bearish in a short-term price swing. So from that point, I would go from high to low. We get our bounce after taking liquidity. We get a bounce right into a bearish imbalance in discount of this newly formed range, and then there's your melter. So that's my model in a nutshell right there. That's it. That's how I trade on any time frame, no matter what. That's the makeup right there. So really just looking for higher time frame liquidity. Then I look for uh, market structure or trend, like which direction are we looking to go. So to me, in this situation, taking out a low that creates a bearish market structure, taking out a high creates a bullish market structure. So the fact that we swept the low and created a bearish market structure triggered liquidity or took out those stop losses, generating a little bit of a bounce, but overarching trend uh, gives us the idea that we can short this right here and look lower from there. Now you might say, "Oh, well, that's bogus." It's easy to say after the fact. Well, look what I said here. Showtime has arrived. Bears better come correct. And we were live trading that day, and we actually nailed this. It took us like I don't know. It was the second attempt because it created a bearish breaker on the downside, but it was smooth and it was so nice because pretty much everybody in live, we're all thinking the same thing, and we smoked that one. So, um, but yeah, that's why I like to put it in a tweet because we can go back to it later and just see how a lot of the times it's so easy to go back and look in after the fact and make assessments and stuff like that, but when you put it in writing, you can't fake that, right? So anyways, but look at this weekly candle. Really, really important that we note this. We actually closed, or not only did we gap open on this week right above that imbalance, we also held onto it. So did we get back one more test on that low wick down into the bullish imbalance right there? Yeah, we did. This imbalance right here should actually look like that. We didn't get into it. I should have said that. Here, there's your imbalance. We didn't quite get into it, but look at where we held. Now, if I remove this, you're going to notice that there's a little, very, very minuscule gap here. So what this is a bullish volume imbalance or a gap higher. So what that tells me is that's the market kind of tipping its hand a little bit, telling me that there's some urgency to move higher. So because there is urgency to move higher, very similar to NASDAQ, I believe 4734 is going to be that destination. So you got a little bit left in the tank there on ES. So that's really it on ES. Not too much different, but just that one fundamental difference there, and that difference really is just we have another high that we would have to take out on ES, whereas on Nasdaq we do not. So um, so yeah, that's it. Yeah, James, sure. We can look at BA and Affirm. So let me just screenshot this really quickly, and then we'll go do those two really next. So whenever you guys request, we'll hop right into them. Um, so all right, we got that one unlocked. Now let's go over to BA right here. And James, I'm just gonna pin yours on the screen. That way, if anybody's I think I can chop up the video. So if anybody looks at a know, or at a specific time, they'll be able to see that BA thing. Where do I have Boeing on this list? Um, I know I have it on this list somewhere. Where is it? There it is. Right, knew it, knew it, knew it, knew it. Okay, so ready, here it is. Ooh, big day from Boeing. Oh, you're gonna see. Yeah, Mando model complete, James. Okay, so hold on. It's loading up right now. Here, I'm putting James's comment right there. So here's Boeing on the weekly time frame. Here's your Mando model. Ready? I tweeted this on Sunday. Actually, we can go back and let's look at the tweet first. Actually, so hold on. I have to come over here. Let's go. I think I just have to like flip screen share. This is all new to me, so I'm gonna. Actually, I don't know if I can do that. Shoot, I'm not so sure. Um, but what I can do is um, I will come over here and do this. Ready? At Mando Trading. Anytime you ever want to see a tweet that I've had on a name, just do my at and then the money sign with the ticker symbol, and everything that I've ever said about whatever name will pop up. But yeah, check this. I got it right here. So what I'm going to do is I'm just going to copy the link and then post it on the chart so you'll see. But last week I was like kicking myself because I didn't have any eyes on BA at all, and I missed out on this one. But at the end, ultimately, I had a good feeling of where it was going because of my model. So here's my tweet from last. I think it was on Saturday. I tweeted this, December 3rd, whatever day. No, it was Sunday. So I tweeted this on Sunday. But wish I had wish I had eyes here. 243.10 Mando model completes, and there it is. So there's your completion of the Mando model. So a low to high. We took out that high with this price run. So you might be saying, I actually had a couple questions about this the other day, like, oh, so how do you set the fib range? Like, okay, yeah. So look, as this thing's going up, like it's going to be here, and until I get an imbalance down, to me, this range isn't going to be set. So no imbalance, and then we just trickle it higher, right? Even up to this point right here, up to this point here, we never had a discount retracement. So the fact that we never had a discount retracement, all that's telling me is that this range is not set yet. So here, boom, and now look, ready? Here's your first imbalance, and this is telling you, bingo, range is set. So once you get that bearish imbalance, look what happens. Bearish, oh shoot, bearish imbalance forms. We get a wick right into it, and we dump, right? And that's, to me, again, there's my confirmation that the range is actually set. And from that point, I have added this into my strategy quite a bit, actually, and actually playing this down to discount. I feel like I know where price is going. So ultimately, this is the play that I really want to take, is that long. But I'm not going to discriminate. I'll take an attempt here, especially after I feel like that first imbalance is really setting the range, and look to play it down into here. And of course on Nasdaq, I really haven't traded Boeing probably in like 2 years, but anyways, you get your discount retracement down to 50%. You might say, well, what is this? What is this? PD array or setup right here. Well, right here you have a bullish order block, right? So you have your down close candle followed by an up close candle that closes above the previous week's open. Let's just see. I see it right here. We're gonna have a breaker, but yeah, we didn't quite get into the bullish breaker down there, so I'm just gonna leave it off for optics. But there is a bullish breaker below that as well, but we don't need it. So there it is, your retracement down into 50% of the range, just into discount, and from there we take off, taking out the swing high. Beautiful. And at the second attempt here, we get through this bearish imbalance. So that's as good as gone. So now at this point here, Uh, Before anything else, let me just screenshot because I'll post this on Twitter tomorrow or Sunday, whatever. Okay, so from this point now, we can say, okay, we took out a high. So what happens when we take out a high? Okay, the way that I look at it is market structure shift bullish. Okay, so now we have to set the range. So what we have at this moment is our low to our current high. Is this the high? Don't know. I I gotta wait and see. I need more information at this point. Could we run higher up to that 278.57? It doesn't sound too terrible right here, as long as I charted this properly. Yeah, okay. So I see one more imbalance right, or I'm sorry, one more swing high right here. That would make sense. And I see a very, very small volume imbalance right there. So let's zoom in. I'll show you where I'm getting that from. But it has already been filled, so that's worth noting. So ready? You see that right there, that little gap down right up here. And we rejected it with that green candle, and that started that decline. But so we have that there, but we have filled it. So at this point on BA, this would be a ticker at this exact moment that I would not even look to really consider playing. So I need some sort of imbalance to form here in order for me to feel good about it. And from that point, I would likely look to play that imbalance. So if it were to continue higher, not as favorable as if we get that imbalance candle lower. When we get that imbalance candle lower, then I can say, okay, now I want to look down into discount. So that's a pretty fat move, and specifically an imbalance in discount. So far here are the imbalances that we have. We have one bullish fair value gap right there. You see from wick, body, wick on either side of this body candle in that rectangles area. We do not have any wick. So that would be a bullish imbalance, right? Price is imbalanced to the bulls in that situation there. There's no contest in that region. Bears were not very active in that region. But here is your next imbalance right here. That's a bullish volume imbalance or gap up. When we get a gap up, all that's telling me that there is some sort of urgency to move higher, right? Yet again, here, another bullish volume imbalance right there. Incentive or showing me the market tipping its hand that it actually wants to move higher. And then one more for good measure. Here's a bullish fair value gap, another form of an imbalance where you have wick, body, wick, and inside this rectangle right here, you'll notice there are no wicks on either side. Price is imbalanced. In this one specifically, there's a sell side inefficiency. It's a buy side imbalance. So that area we would tend to look at this as some sort of support. It would be more ideal if it was located in discount of the range, but still worth having on the chart and worth noting. So here's where I'm at right now with BA. Like I said, I just hadn't. I gotta be honest, I had not been paying attention to Boeing, and I haven't really gotten that one requested much recently. So, because of that, I missed it. It is what it is. It's fine. But it would have been sweet to have taken that off that 50% level down there at 176 and played it up to 244, huh? Yeah, that would have been awesome. But um, can't catch them all. That's the way I look at it. So I got a couple others that I'm currently in. So, but anyways, um, okay. And James, you said there was one more that you wanted to look. Sorry, James. I just saw. What about the bearish imbalance from July/August? Okay, so let's go back to July/August. Where is it? Right here? I think this is the one that you're talking about, right, James? Well, here again, if we're to look at this price range, and obviously I just moved the fib, but here's the where it would be located. Boom. But remember, when we have bearish imbalance in a bullish price range, we're not really looking to play that to the short side when our draw on liquidity is that swing high, right? So if this is our swing high, we're looking for bullish price action to move up and through it. Also, worth noting that we got into this already and rejected it. So this is an imbalance that was previously tested. And look how perfect this is. Like you can't make this up. Look, this gets set up right here where you have your high down to your low, wick up into discount here, and dump. So that would be Boeing. Um, so James, I hope that answers your question there. But little 2, 3 candles. Oh, they got yeah, yeah, right, James. Yeah. So it's just depending on where those imbalances are set at. But again, if anybody on Twitter has any requests or anything like that, feel free to shout them out. I'm gonna do a firm for James right here as well. Let's go down here. I most definitely do not have this one um, charted out, but let me just come over here really quickly. Right here. Okay, good. All right, so Affirm. Let's see. I have not looked at this one in so long that I have my old logo on here. Whoops. Okay, so first and foremost, it's worth it to look. See, I even have my old fibs on here. Nasty. It's been a long time. Um, but anyways, let's take a look at Affirm here. So obviously we have a bearish trend on a higher time frame on Affirm from those highs at what was this 176. And this is the way I would set the range again. So ready, set it here. Did we get a 50% retracement on that next green candle? Nope. Okay. Any retracement to 50? Nope. Any retracement to 50? Nope. Nope. And we just continue until you get that 50% retracement. We're never going to get it, but that's why in that situation I just wait for whatever the lowest low in this current situation would be. So with this being said, we should just identify all swing highs in the process. So you have swing high here, swing high here. What else? Swing high here and swing high here. Okay. So all little highs, but something that's worth noting, and actually let's do these imbalances first. Let's just see if we have any. I don't see any on the weekly time frame. Here's one. Okay, ready? There's our first. Okay, here's our second. Price got up into this one, got over it actually before rejecting down lower. Price rejecting here. Why? You have your wick to wick, bearish fair value gap right there. And we have, oh, very small. This is a sneaky one right here. Ready? Boom. Come on, sucker. There it is. Okay. So ready? I'm going to zoom back up here. Good. Okay. So you'll see that bearish fair value gap right there. Look how perfect that rejection is right there. Boom. Okay. Now, if we want to crunch this down and we want to look at this from I guess you could say like a tighter window, if you will, right? Because 50% of this range is really far away still. That's worth noting. But if we want to crunch this thing down and make it into a smaller time horizon or time frame, I guess you could say, we can look at it from this perspective. We have a low, a high, a lower low. So this candle right here, this last candle right here, hold on, boom, all the way down. I know this might get a little sloppy right now, but just hear me out. That black box right there, that indicates our bullish breaker. So right now we have a bullish breaker and it's pretty large, from 41 down to 31 essentially. Now we would have the expectation that this is actually going to act as support. Now, how can we look at this additional perspective here? We did take out a swing high. So when we take out a swing high, we have a bullish market structure shift on a smaller time frame. Okay. So what was the price run that took out this swing high right here? Well, could you say all the way from this low to here? You could say that, but it's not going to be as precise. And I would want to be much more precise when I'm dealing with something that's had a range from $8 to $40 over, a couple months here. But from our last red candle, we have this low here up to the high that was just formed here. Okay. So could a firm just completely take off? Sure. I would favor it getting just a little bit higher, maybe even into this 47. And from that point, we get some sort of rejection. So let's just say we get right and we perfectly reject it, right? I'm just forecasting here. Look where we would have bullish imbalances in discount. We would have our breaker, and we would also have multiple bullish imbalances here. Ready? Boom, boom. Okay, here's greens. Good. Here is a bullish fair value gap. Come on, let me get there. Boom, boom. Okay. So we'd have multiple bullish fair value gaps or bullish imbalances down here in discount of this newly formed smaller time frame range. So when we would have that type of situation, I'd look for the retracement back down into here for a long. So realistically, at this point, right now, we just swept liquidity. So from this point, could we make an imbalance and continue higher? Sure, absolutely can happen. The way that I like it and the way that fits my model better is if we were to sweep that high, get it some sort of imbalance down and retrace lower back down into discount, so somewhere down in this vicinity here, and from that point look to make the move higher. I would actually like it to go up to here, so it would justify this breaker being somewhere in discount of the range, if that makes sense. So we would not only have our breaker, we would also have a bullish imbalance in discount of the Mando model, looking for another run higher, and really ultimately have a target kind of set on an Affirm somewhere around $92.64. So that's Affirm, James, if that is helpful at all. But let me just do a little screenshot action, because this play actually kind of reminds me of the end phase play. Another one that I was a tad late on, but I was kind of encouraged that we dropped a bit today, because I feel like I might get an opportunity at this sucker. So here's Affirm. Now let me just do this screenshot. It'll be up here on Twitter over the weekend at some point. I haven't done Affirm like ever, so that's cool that I can add that one in. But very similar to this on end phase, and then I'll take some more requests too. But on end phase, if we take a look here, we are currently, it's gonna load up here in a second. Hold on. Here it is. So on end phase right here, you'll notice our high down to our low, right? There's my range set. The reason I have that range set is because we took a low on this move down on this green candle here, never got that retracement to 50%. So as price got all the way down towards its lows, we made that move higher. Now this is what we're dealing with. That was an inverse, but that's for another time. That's a little bit more in depth right there. But take a look. We on this price run here, we rejected 50% of this bearish fair value gap or bearish imbalance right here. What I really would like to see is a retracement down into this 91, and then from this point, I got a $9 risk for a potential 40 something dollar gain to 132. And if that were to happen and we sweep this high right here, we would also create a bullish breaker. We would have our, where is it? Our first low was set. Where was our first low set? I'm sorry. Oh, here it is. Low. Oh, I'm sorry. Low, this candle here, high, lower low. And then when we take out this high, we would set ourselves up for a nice little breaker. But that's what it kind of reminds me on Affirm. I think we will likely at some point or another get into discount of that range, and I know it's really far away. Could take forever. I'm not saying that it's going to happen overnight, but absolutely could happen, and would be a pretty sick trade. So let me just screenshot end phase there. Let me pop on over. Yeah, for Affirm, if it makes another imbalance to the upside, that's a different story. But if you, to me, I would favor catching that retracement, which I think we're going to get at some point. I don't know how much meat is left on the bone on that long, in comparison to how many points we could scoop on the downside and then back to the upside following the retracement into discount. So, but let's see if I got any more requests here. Okay. Oh, let me come back over here and let me just do that real quick. Okay, cool. So while we wait on another request, I'm going to go back as business as usual and continue to move through. Bitcoin, we talked about Bitcoin the last time I was on here, but we can do it again. That's fine. We'll do it briefly at least. But here's Bitcoin. Here's your range from that large down move that we had from the all-time high sweep right here. And again, what happens when you sweep liquidity? Wait for that first imbalance to occur. When that first imbalance occurs, it's tradable. And here's your first imbalance that occurred, and that really set the stage that we would get some sort of retracement lower. And clearly, it was a pretty large one. But on Bitcoin, I guess I don't know. I'm gonna pull up the tweet right now, but here is BTC, and then I'll pin the tweet on here so you guys can see. Again, I like to put them on Twitter, and that way I can go back to them and not just say I said it, but I don't have the ability to go back in time. And here it is. Copy this right here. And I'll drop it on the chart. Ready? Here it is. Command V. Here it is. Okay, so just look where that line is coming from. There it is. Okay, I know it's tough. It's a lot of PA here, but here, there's this. Okay, so right here, I had stated, I don't know about you, but I'm feeling 42, a little Taylor Swift clowning, but currently running into the high of a bearish imbalance and premium of the range. Price can pull back from here, but I am expecting 42 over the next few weeks. And, about 3 weeks later, we got that move up and through. So my thought process behind this was we can get to the high of it and retrace back down lower towards either the bottom of this bearish imbalance here, maybe into discount. But that would be more of like a swing idea in terms of looking for higher at some point. And obviously, if you're I don't know how many people trade options on this stuff, but if you're fighting the clock, then it might be difficult. But if you just have ownership of whether it's a full Bitcoin or fractional, you could totally have bank on that. But why did I think it was going to that point? Well, if the range was set here, which I felt pretty good about, again, we had another breaker, low, high, lower low. Here's your breaker candle. Ready? Here. Price wicks into the breaker, takes off. To me, that's good for the range being set. And with the range being set there, you'll notice price, it really does like to go back up to 50%. And again, don't take my word for it. Go back and back test it. But you will notice that more often than not, when a range is actually set, you're going to notice that we're going to go to 50% of the range, no matter how big it is, no matter how how many points or how ridiculous it might seem. It tends to follow those ideals. So, but yeah, this is where I'm at on Bitcoin now. At this point here, it's hard to say I'm bullish at this point. I got to be honest. Let me just remove this right now. I don't want to say that I'm like, I'm shorting this or anything like that, but I could totally see it start to pull back here. But the picture is not as clear because I wouldn't be surprised if this happens. 52,000. 52,000 is the next imbalance deeper into discount of the range. And maybe a little more time. That might be a good thing for the Bears. I think, I overall, just market wise, I think we got a couple 100 points left. Sweep those July highs on NASDAQ and ES. And from that point, we start to retrace back into discount. After our retracement back into discount, I think we can make a run for those highs. And then at that point, maybe it's after 2024, who the hell knows? But I think I think there will be a pretty substantial move to the downside following that. So, but yeah, here's Bitcoin. I'm just kind of rattling them off how I would normally do them. And, again, if anybody has any that they want to take a look at, feel free to shoot them over. But here, let's take a look at Apple. This one we talked about a couple days ago, and also on Sunday of last week we discussed that. So here is Bitcoin. Apple right here, and we have this move. Bingo, right here. Very nice. There is your low to high. Why did I use that low? Well, what was the run that took out this high here? Also this high here, also this high here. It was from this low to that high. We got our retracement back down into 50% of the range, and from there we took off higher, going towards that high at 198.23. I still think that is the ultimate destination. It's about 3 points away, not even 2.5 points away. So I think Apple's going to be moving a little bit higher. Price getting a little sticky, right? Rejected here, got up into this right here and rejected. What is this box right here? This is a bearish order block. So up close candle followed by a down close candle that closes below the open of the previous candle. So that bearish order block, think about it. That's a lot of orders that need to be filled. And with that being said, it can take some time to get up and through it. So more chop, maybe, but ultimately, I think that destination is 198.23. Um, so that's Apple. Not much has changed at all, really, here. So I want to make sure that I get this screen grab. This one will be on Twitter over the weekend as well. Um, but what else? Anybody got any names that they want to take a look at? Just drop a comment and we'll get to it. But um, give me 1 second. I'll be right back. All right, I'm back. Sorry about that. Let me just do this. All right, I'm looking real quick. James, you got any more? I know you're on the YouTube. Twilio, cool. Yeah, we can look at that one for sure. Um, Here's this. Okay, we'll get over to Twilio right now. Another one I probably have not charted in a long, long time. Um, Here it is. Um, ha, tell me what you see. Okay, so a little sloppier, but still plays. And you can look at it from multiple perspectives, actually. Let me just note that we have this bearish imbalance here that we did fill, but we've wicked into it multiple times, and it's caused a rejection each of those times. Um, but what do you have right here? When we took out this high right here, boom, that's a bullish market structure shift from low to high. Hold on for dear life, baby. Do we have a discount imbalance that we caught on to here with that ugly candle? Yeah, again, ugly, but we did indeed. Very slow, but also worth noting this candle right here. What is this candle? A bullish order block, down close candle followed by an up close candle that takes over the previous candle's open. So I would have that in purple. There's your run higher. Not quite reach up into that right here. Why did we reject here? Okay, well, what is this candle right here? Bearish order block. Up close candle followed by a down close candle that overtakes the open of the previous. Price gets sticky, rejecting up in that area for quite a bit. Retraces down one more time into the same imbalance as before we take off and we're heading higher. So yeah, I mean we might be a little late on this one, but I think Twilio probably goes to 79.70. I'd feel good about that right there. A little bit more sloppy than a lot of the other names, but still, nonetheless, you got a lot of bullish imbalances formed on this most recent price run. So yeah, that's a pretty good one. I like it. So yeah, here's Twilio, and James, I'll pop on over and see if you had anything over there. Cool. Um, what else we got? What else we got here? Come on, somebody's got to have something they want to look at. Because if not, I'm just going over the same names that I typically would. There's Twilio anyways, but let's go on over and look at Tesla. I'm in Tesla, so this will be a good one to look at. Here's my whole idea for Tesla, actually. Bring it, zooming in a little bit. Okay. Ooh, too much. Okay, so this is where I'm at on Tesla. You have a bullish market structure shift right here. We took out multiple highs. 1, 2, 3 with this price run. Why didn't I use this low? We had a black candle mixed in there, a red candle. So to me, I want to use the most precise, or I guess really the move that started the price run, and it would be from that candle. So, but you have your low to high. You have your first discount retracement. Why did price bounce here? Well, we had this. bullish imbalance, boom. Price bounces higher. We have a bearish order block right here. Price gets up into the bearish order block, rejects lower, catches and holds on to this bullish imbalance here. Ping pong, baby. Down here, bounce yet again, gets back up into a newly formed bearish order block right here from low, or right here, bang. Remember, up close candle followed by a down close candle that closes below the open of the previous and rejects lower, creating an imbalance lower. Sweeps this low, also worth noting, sweeping this low, getting deeper into discount, specifically 79%. And from that point, you will notice that we take off, right? Sweeping higher time frame low, getting into a deep discount imbalance right here with that gap higher, and price starts to run. And where we are right here. Yep. So last week we got up into, or 2 weeks ago at this point now, got into that bearish imbalance right there. That's a bearish volume imbalance, that little gap down right there. See, price gets up into it, rejects it. But in the process, and this is worth noting, we did gap up on that candle. So that gap up was telling me, or tipping its hat, that we are going to go higher from that point, which we have. We ended up running higher and rejecting. This week, we opened right inside that bearish bullish imbalance and closed up. So really, for me, these are just the more immediate targets. 150 or 252.75 would be my first target on this, and then my next target from that point would be 268.94, and then third target would be right here, bang, 278.98, and then the ultimate target is just under 300. Sounds crazy until it happens, right? The same thing was said when I was talking about coin to 114 at 80, or AMD to go to 132 at 90. And again, if you don't, you just go back and whatever the ticker is, you can just do @MandoTrading and then the money sign, and you'll be able to see my exact tweet about it. But here's Tesla. So again, not much has changed in my thesis on this sucker at all for now. So, but with that being said, let me go over to AMD because this is a sick trade that I'm almost done with. We're so close, and this is one where I took shares and not options. I actually just recently got back into swing trading options. I like to do shares because you don't have to fight the clock as much, but I have a pretty good feel and pretty good understanding of where we're going to move in terms of direction. So I wanted to make sure that I was, more refined on how much time I was actually giving myself prior to toward that entry. So, anyways, I am in shares on this name, anyways. But oh no, my tweet's gone. Dang it! I'll go get my tweet too. But for now, you can look long entry off of this bullish imbalance down here at 79% of the range. You have your first target, or your first take profit, second take profit, third take profit here. I'm going to pull back the tweet from when it occurred. So again, you guys can see this is not hindsight at all, because I don't think hindsight helps anyone with anything. And hindsight is just so easy. Oh, hi, Wowzer. Hi, Jill. I'll get to those tickers in just 1 second. Thanks for popping in and giving them. But let me just zoom out, and I got to go back on. Oh, here it is. Oh, no, I just had it. Here it is. Good. So this one's back on September 23rd. Unbelievable. Right here. Let me just copy the link and I'll put it on the chart so you guys can see it. Right here. Tweet. Command V. And there it is. Alrighty. Obviously, that first attempt, we did end up bouncing again. I didn't get my opportunity at that point. But there it is. My AMD swing game plan. 10-point risk for potential 40-point win. And we are almost there. Looks much cleaner on the weekly time frame. I'll show you guys on the weekly time frame because it makes it a lot easier to see. Oh, less candles to worry about, but here it is. There it is. Look at that. Beautiful. Okay. Here's your bullish imbalance down here in discount, by the way, right there. Boom. Bing, gone. So yeah, that was pretty sick. So I'm gonna just screen grab these, and then I'll get to the ones that are in those YouTube comments. Um, AMD, bang. Oof, it's just so sloppy. Dang it. Come on, there it is. Good. Gotta see the date. There it is. Good. No hindsight shit here. There we go. Good. Let me just zoom over. Good. All right. So let's see what were the ones that were asked for on YouTube. We got Hi Adisu Dereje. How's it going? Okay. Oh, James, I just saw Amazon. Let's do Upstart first. Upstart from Wowzers. Okay. Uh, thanks for popping in. I gotta be honest, this is definitely one that I've not charted in a while either. So, it'll be good. At least we can go through together. Here's Upstart. Um, here we go. Sweet. Nice. Okay. So, interesting. Okay, so obviously on a much larger time scale, this is a bearish range, right? I think we can all agree on that, right? I got that guy who Upstart was at $400, and they were like, "Oh, what does Upstart do?" And he's like, hello, hello, hello." I don't know if anybody remembers that guy on CNBC. That was hilarious. I got to keep this on the chart, but uh, yeah, that is too funny. I forgot I had that on here. But anyways, look, if we look at it from this perspective here on a much tighter and more brief range, why did we stop here? What was that rejection from? Bearish imbalance right here. Every single move that occurs on this chart can be justified, I promise you. So there's your rejection right there. Okay, but with that run up, believe it or not, we took out this high, and that high right here. So with all of that being said, what was the price run to do it? And it's right here, from low to high. Okay, now let's zoom in just a tad more. We have to remember, and I'll show you where things can get a little ugly, but also worth noting here, I'm actually going to go here with that low, and there's a reason why. The reason I'm using that low is because with that low, look, we swept liquidity right there, right? We took out that low, and look what happened after we took out that low. Take off, right? So here's our first imbalance and discount of the range. Oh, look at that. Perfection, eh? Come on, man. Look how perfect that is. There's your bounce. Yo, this is actually, I'm kind of liking this. Wowzers. I think you might run into some, might not move quite as fast, and I'll explain that in a second. But we have that. So I'm just going to write it in so you guys can all see this. Here's your higher time frame liquidity sweep. Okay, right here, higher time frame liquidity sweep. We have my Mando model here. Since we took out those highs, we go from low to high. Here's your retracement back down at the discount of the range. Now take a look at this. Ready? This is the reason why I think it might slow down, but ultimately I do think up is the destination. But here is the reason why. We have a huge bearish imbalance right there. Okay, so with that, price is up into it right now. Why would I not expect this to reject and expect it to continue higher? Well, the price range is bullish. Even though it's a smaller time frame or smaller time horizon, it is a bullish run. So with that, and the fact that we already got into discount and held, and we're starting to make this run higher, I I think it'll take time, but I do believe that we will get through that. So that's pretty interesting that we would have this um, in this particular spot. Now, before anything else, let's just go. I'm just curious myself. So, if we were to go from the high of this range, which is just insane, let's go from high to low and just see where 50% would be. Ready? High to no, we had a new low over here somewhere. Where was it? We can zoom in and fix it. So 50% would be at 207. That's so funny. Um, Dang, that's crazy. Um, yeah, I don't know about that, but at least short term. But where was that other fib that I had put down? There's Where's that other one? It's got to be over here somewhere. Oh, there it is. Yeah, and I meant to have it here. Right there. Boom. Okay, that'll make it a little more uh tight or on point. Good. Okay. So yeah, this is what I got on Upstart. Um, yeah, pretty sweet, man. Just might take time. That's the toughest part I find with the options swinging. It's just you you have to take into account for that contract burn and the theta burn. Um, but if I were to have shares of this, I would not be sweating it. Um, yeah, that's pretty sweet, man. Dang. Okay. Really good eye there, Wowzers. I know. I think you messaged me earlier on Twitter today about it, and I wasn't able to look at the full picture there. But let's see. Is anybody else? Oh, cool. Stripes. Stripes. You got SMCI and SQ. Okay, I will get to that one. I got a few now in the YouTube that we'll get to. Um, so there's UPST. Now, yeah, crazy until it happens, right, James? Yeah, you got it. Wowzers, no problem. Um, let's see. Let's go to we'll go to Jill first. Jill asking for Neo right here. So let's pull up Neo really quick. Okay. Neo. Ooh, eh, kind of disgusting. I gotta be real. Yeah, I'm not really loving this. Let's see exactly where it is. Um, let's just get a. I'm just trying to get a general idea here. Yeah, nah, I'm not really a fan of Neo. Uh, we swept another low, so can you get a bounce on this? Sure, but if we're to zoom in here, we're below 79%. I don't favor the upside here at all, um, but it's worth noting that we swept this higher time frame low. Oh no, we didn't. We didn't even sweep that low. That's even worse. Look at the exact low of this 701, and that's 7. So we have relative equal lows right now. So I would expect 7 to get swept. So go below 7. And after that, if you are to get some sort of bounce, just note because you are taking out higher time frame liquidity. That's worth noting. But here's your high down to your low is going to be a little different when it actually sets below $7. But here's what I'd be looking at. Here's your first bearish imbalance right there, and that's in discount of the range. Here is a bearish volume imbalance right there, and then there's one more bearish. Here's a fair value gap. So a lot of bearish nonsense going on up here. So to me, from this point, order of operations, I guess, would be sweep that low because you have relative equal lows. So at some point or another, you can expect probably going to get back down there. So if we were to sweep that low and then start to make a move higher, if we create one imbalance up, then I would look to play the retracement back into that imbalance just up to 50% of the range. So really not the most ideal setup for me at all. It just needs to me it's got to do a couple things before anything else. So I don't know. Everybody loves talking about Neo. Why does everybody trade Neo? Neo, I haven't touched this in so long, but um, there's that. Let's see what else. Uh, oh, cool. What's up, Dallin? What's up, Matt? I'll get to those shortly. I had one more request over here that I want to on Twitter. I'm just going back and forth between both. So, okay. So Stripe said SMCI and SQ. Let's do SQ first because I have this one pretty much done if I remember correctly. I actually shorted SQ this week. Made like a quick scalp on it, just because we talked about it in the group the day before, and when I had set an alert for it, and it came up on my phone, so I just popped it on. But there it is. There's our alert, 69.90. Um, but here, I definitely have this charted. Definitely have it charted. There it is. Nice. Okay, so if we just take a look over here, overall at SQ, oof, another one, not the most ideal. To me, we talked about this the other day. Uh, Personally, I would love for price to reject like here and head down for this 32. Following the sweep of 32, you'd have a new bearish range set, and then that retracement higher could be huge. So that's really what I would prefer. Um, but where is it? Let me just remove this really quickly, and I'll just show you like how my fib setup would be. So the fact that we took out this low with this price run, I would have high, whoops, high to low. We have relative equal lows there too, worth noting. Let me just pop this in. Whoops. Relative equal lows. Okay, so relative equal lows is very different from a double bottom. I don't think people teach this the right way at all. Anytime you see them bounce on the same spot, if that second candle doesn't make a low, um, that's to me uh, a very problematic, because if we go below on that second candle, that to me would say, okay, we swept liquidity or took out stop losses, generated liquidity to move higher. If you don't take that low, that's essentially somebody like in this case is perfect. What's the low is 38.91. Low is oh whoops 38.91, and the low here is yeah 85. Oh no, we did go lower. Sorry. Um, Why does it say 91? That doesn't make any sense. There it is. Good. Okay. But if they're equal or very close, but the second one is a little bit above the one right before it, all that tells me is that at this point, somebody had to have gone long to push price up higher, right? Well, at one point on this candle, the wick was down here and we didn't sweep that low. That means somebody had to double down to keep that afloat and prevent the stops from getting triggered. So that's double the amount of liquidity below here. And if that were to happen, that's a little dangerous. Um, but it didn't happen in this case, so don't worry about it. But yeah, so ultimately, I'm looking for a rejection from this point, and any move above that 74.36, specifically, what would really change the things up would be 81. If you get on over 81.47, you get a bullish market structure shift, and from that point, my idea of coming down to 32, sweeping those lows before taking off, that's it's not going to happen. I'd be wrong, and I would just take the L on that. But the reason why I took that short the other day was, to me, it was like, okay, it's either going to be a quick stop out or an excellent short, a 30 point short, 35 point short. So that's the way I like to look at it and use like the risk reward of what would make sense as a way to kind of help me navigate the trade and dictate it in a way where it makes sense monetarily as well. So but yeah, that would be my model right there. Did we sweep? Yeah, we didn't even sweep any higher time frame lows. So I don't know. I don't really like the long setup here as much. But again, even if you are wrong on this short, this is the way that I'm thinking about it, at least. You're risking 5 points for a potential 35 point. I'll take that risk. That's just typically how I'll roll, because I can justify it to the downside. If I couldn't justify it to the downside, I'm not just going to short it just to short it. But there's SQ. Now let me go. We will do the other ones from Twitter, I should say. But thank you for that. So now let's take a look at Dallin. Dallin had said MDRX. Never seen 1 minute breaker and Mando go in pocket retest so clean. Oh yeah, yeah. Dallin likes the model, man. Sweet. So what is it? MDRX, right? MDRX. Okay. MDRX. I've literally never heard of this one, but we'll do it. Veridime. Let me just check my phone real quick. Okay, cool. All right. So Veridime. Let's look. Oh, baby. What the hell happened here? Yikes. Fell off a cliff. Okay. I know what everybody's thinking. Oh, Head and Shoulders, Head and Shoulders. You want to know why Head and Shoulders would work and why it wouldn't work? Well, take a look. When, in what instance would a Head and Shoulders not work? Um, the Head and Shoulders would not work when, ready, right here. Did we get up to 50% on this initial move? Nope. Right here. Nope. Ready? Bang. Swept the low. Shifting market structure. We needed a market structure shift to the downside. We had one here, very, very, very small, but nonetheless, this is we would be in a bearish trend after taking out this low and after taking out that low. So with that retracement back up into discount, is there a bearish imbalance? Bingo. Mando model done. That would be, and that would be the take profit. Or you can just note that you could get a bounce off of that sweep right there. We didn't, but you could theoretically. But anyways, if we were to zoom this out on a larger time frame, the short term is obviously bearish here. But if we zoom it out just a hair and go back to 2020, what was the initial price run that took out that first high to create a bullish market structure? And it was from here up to here, right? No retest into 50%. Okay. Bingo. Bang. Okay. Here's your retracement back down into 50. Here is your bullish imbalance right at 50. Um, Hold on. There's two of them, but there's your first right here. Do you see how insane that is? Literally right off 50%. Can't make it up. Um, but anyways, there's your retracement down into 50%. There's your Mando model to the upside. So when you get it to the upside, we took higher time frame liquidity up here. Worth noting. I bet you if we go over, yep, we did. Check this. Oh, higher time frame liquidity sweep. See that? What happens when you sweep liquidity on a higher time frame? You get reversals. Sweep, reversal, dump, sweeps liquidity to the downside, bearish structure on the shorter term. So if we are to look at this from a larger time frame perspective, ready? Let's just do the overarching range from whenever that low was. That's the COVID low, right? Okay, there it is. Bang. And ready? They're going to leave little clues behind for us. But here is your 70%. Good eye. Here is your bullish imbalance right here. Bing, bing, right there. So yeah, down. Ideally, you would get that sweep right there, 956. Take out that low, get deeper into discount, and so you're sweeping higher time frame liquidity and getting deeper into the discount of the bullish imbalance there. And from that point, my eyes would be looking up. So, but yeah, there's MDRX. Another, again, I haven't seen that one before, but we'll do it anyways. All right, so let's see. We got Matthew. What's up, Matthew? S. Okay, yeah, another one that I definitely do not have charted, but that's a-okay. Sentinelone. Okay. Just haven't seen it before. That's why I'm like, you know. Whoa, hey baby, there it is. Nice. Okay, so obviously higher time frame, you have a bearish market structure or a bearish trend. So I just want to annotate what 50% of this range is, because if we do get the reversal, like where would we look for price to maybe run into some trouble? Okay, so again, we can go through each run and see where we get bounces. From here, did we get a 50% bounce? Nope. From here, did we get a 50% bounce? Nope. From here, did we get a 50% bounce? Nope. From here, did we get a 50%? Nope. Nope, 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 nope. Have not got a 50% bounce. So we do not necessarily know that this range is set, right? Why would I favor it at this point? We do have a couple bullish imbalances here. that can kind of give me the clue that we're going to end up running higher. Now, I want you guys to just take a look at this, right? I need to just note that this bearish imbalance had occurred right here. Look where it rejected in this bearish imbalance, 50% or midpoint. That's why when they brought that little, when TradingView added in the feature to put the midpoint of a rectangle, I was so excited about it because it is so helpful. I used to have to go like this on every single one and go, where is it? Come on, what are we doing? Give me, there you go. Boom, boom. And I would have to map out 50% manually, but I don't have to do that anymore because they got the thing. So that's helpful at least. But here's the first thing that we should note. Okay, obviously we took out higher time frame liquidity right here with that move. See that? See how minimal that is? But look what happens when you take out that higher time frame liquidity, right? Immediate. Take off. Take some stop losses. Market needs money to move. It's got to sweep lows. Swept low, took off, right? You might say to me right now, oh, well, we have this bearish imbalance right here. Why didn't we reject it? Well, here's the thing. The longer we spend, longer time-wise that we spend inside a bearish imbalance, what are we doing? We're balancing price range, right? If we're sitting in there, obviously orders are coming and going and they're getting taken in that specific range. So if price is getting taken in that specific range, we're just balancing price range. So like I would never look to short this. Why? Because we're so deep in premium. So we would be overpaying for our short to like the max. And that's why I wouldn't be looking for the long in this, or I'm sorry, the short in this exact imbalance right here, especially after sweeping higher time frame liquidity. Because what happens at higher time frame liquidity? Reversals, and this move is already up 100% from where it was. But anyways, we take out this imbalance finally after 20 weeks, 15 weeks, whatever it was, and we create our first imbalance here. Bingo. So this is, to me, would be a situation where pullbacks would get bought, and as we would make our way higher, and we also short term market structure shifts right here. Okay, so what was the run that started that whole shindig right there? It was this low to this high. Do I know this is the high? Not necessarily. So we actually made an imbalance up and through, so we can continue higher. But to me, I would like it to get into some sort of imbalance prior to looking higher. But really, at this point, if we're going off of the overall range, whoops, we're going off the overall range. 50% of that down move is $45. So that's almost another 100% from where we are right now. So worth definitely worth charting. That was a good one. Thanks, Matthew, for that. For MDRX, does it mean bounce from 79% level, or it needs to see price confirmation? Okay, so let me just add that question on here. We'll go back to MDRX really quick. So in this situation here, Jill, let me pull it up. I already forgot what we're talking about. But oh, okay, I know what you mean. Yeah. So yeah, there is a bullish imbalance here, but there is only really one instance where I say I need confirmation, because to me everybody says it, but what does it really mean? It means you'd prefer to see it start to run and just rush into it and get it, and hopefully catch the ride. But for me, I actually prefer buying off of red candles in my discount bullish imbalances. And the reason why I would prefer to do that is because you just catch more of the move that way. And also, if you're catching it on the red candle, your risk is going to go down as long as you know where, okay, this might not work out for me. Like, in this situation, there's right here, like if we take out that swing low right there at 76 or 765, I'd probably be like, I'm done. But realistically, like if I were to take a trade like this, I would want it to sweep that low right here at 956 and kind of start to move from there. So if it bounces from here, tough. I'm not in. It leaves without me. But to me, it would make a lot more sense to sweep the higher time frame liquidity, get deeper into discount, specifically the bullish imbalance in discount, and then take off from there. And then again, trade goes to SHIT if we sweep that low, and then we just create another mini bearish market structure shift. Um, so yeah, that would be my idea on this one. Does that help there? I know everybody just likes to say confirmation in this, confirmation that. What does that mean? They don't offer any explanation as to what that confirmation is. The only confirmation that I ever need is after sweeping higher time frame liquidity, because I know at higher time frame liquidity we tend to reverse, right? But if we don't get that bearish imbalance down, or if we don't get a bearish imbalance up, there's no imbalance, we're probably going to chop around and consolidate. But if we get that imbalance higher, to me that's telling me, okay, we're going to go higher, and from that point I'll look to play it. Vice versa, if we sweep that high and we look to go down with an imbalance down, that's when I would look to go down. But until an imbalance forms, and in that case, the imbalance forming would be my confirmation. Any other setup, any other trade, confirmation, I just think it's something people on Twitter say to, um, you know, try to justify something, but they don't give any explanation as to why. And that's what drives me nuts about people on Twitter. But so yeah, there's that one, MDRX. Again, if anybody has any, what's it called, any requests or anything like that, feel free to shoot them over. I still got a few more I got to take care of here. So let's see, where are we? Oh, SMCI. That was a request that we got on Twitter from Stripes. I hope you're still here, Stripes. STRIP. Oh, wow. I just typed in your name instead of the ticker. Whoops. 9:46. It's late, right? Okay, so here is SMCI. Dang, that upstart's got me thinking. Where's all right, cool, Joe. I'm glad that helped. Where yeah, wowzers with that upstart, man. Dang. Oh, baby, look at that. Nice. Okay. So let me just look left. I don't anticipate this. Wow. Imagine buying this like COVID lows. Sheesh. Okay, so we're not quite in uncharted territory yet. Anything above this high would totally be uncharted, and that's something I've yet to really study or take into account. To be honest with you, like I when we take an all-time high, like you can use a standard deviation or like a fib line, but I don't feel as comfortable with that. So let me just map out some of these imbalances really quickly. Here's one. Here's another. Oh, whoops. There you go. And all of these are on the weeklies. Just that should be noted, because these could take time as a result of that, right? We're not looking at the 15-minute chart where we would expect something to happen quickly. These are happening on a much higher time frame. So, okay, so you got a little bit of consolidation here on SMCI. But here, well, if I zoom in like this, hold on. I just want to show you guys one thing. Can't help myself. Can't help myself. Ready? Oh, man. Okay. Ready? But took out these highs here. Hold on. Ready? Low to high. Retracement down into discount, bullish imbalance. Is there a bullish imbalance here? Oh, yeah, there is. Mando model complete. That's number one. Ready? Okay. That's your first one. Just watch. Here's your second one. Low. Oh, no, wrong one. Whoops. Here. Low to high. Why am I going low to high there? We took out these highs with that price run. Retracement down into discount, below 50%. Bullish imbalance. There's one right here. Hold on. Whoops. Boom. Right to the tick. Here's another one, though. Just in addition to that. Boom. Mando model number 2 complete. We're going to keep going. We're going to keep doing this sucker. Ready? Oh, this one might be tricky. Nope. Where is it? Ready? Low to high. Why? We took out with this price run right here. Bullish imbalance and discount of the range. Bada bing. Mando model number 3 complete. SMCI is a walking Mando model here. Low to This high right here didn't get to 50%. Bingo. Did we get to 50% here? Yep. Did we have a bullish imbalance and discount? Yeah, right here. Ugly, but count it. Wick to 50%, takes off, another one, and then it's gone forever. So he had 4 Mando models in a row before that huge rip. It's pretty cool. But you see how you could use this, right? Like the use case is completely there. You can back test this on anything. Don't matter. It's gonna work anyway. So anyways, we'll go from this low to this high, no 50% retracement, so that ain't it. There it is. Okay. Oh, still not at 50%. Mm, I mean, I guess you can really use this because it's coming after a red candle. And if you were to use this, I mean, it still doesn't solve. No, it doesn't solve it. We haven't gone to 50%. Oh yeah, we did. I'm sorry. We've held 50% multiple times. Sorry. Uh, I mean, not really the most ideal, but we did just hold this. See that gap up? Bullish volume imbalance. That shows you some, um, what's the word? I guess, it's showing you some, uh, a reason for it to move higher in this sense, right? Every time we get a gap up like that, that's all I'm looking for. It's just showing me that it actually wants to go higher. And then on the flip side, if we're to gap down, it's showing me some aggression to move lower. So we did gap higher a couple weeks ago. We ended up moving much higher, and then when we got back down into it, you'll notice that we pop very, very quickly. Um, in this situation here, my model would be complete at 357 flat. So that's a pretty big move there. Um, hmm, we don't have relative equalize. I mean, this is just not really a nice setup to be honest with you. There's a lot of consolidation here, but um, still applies. I mean, if you were to look to long this or something like that, like uh, there is a potential for a big upside here. What is that, 80 bucks? But on the downside, to me, the trade kind of goes to crap below 227. Could you wait till it gets down into here? Sure, but then you'd be bag holding for like $100. Do you really want to do that? Probably not. So, not really an ideal trade setup for me here, to be honest. But I know a couple people had asked for it in the comments, so I'll just leave it at this for now. But yeah, my model would complete at 357 on this one. Do I think it'll probably go up? Yes, but the thing is, like, in terms of like trading it, like to me, it's a little difficult, to justify. Right? You're risking what, $50 to make 80. I don't know. To me that doesn't really make too much sense. So, so yeah, that's SMCI. Yeah, sure, Alan. I can go over to MODG. I don't know if I screenshotted this. I think I did, but I'll do it again just so I don't forget because I know a lot of people had asked for this. But anybody listening on Twitter, feel free to throw over some requests out here. We can most definitely do some more. MODG. Okay. MODG. Oh, Top Golf. I love Top Golf. That is a great place. It's like an hour and a half away from me, but every time I'm out there, I go. And I suck at golf, but I like crushing the ball. Um, okay, worth noting, we have a market structure shift. So despite this, if we look at a larger time frame here, this is technically bullish. Um, I need to clean this up. Hold on, right there. Bang. Okay. Oh, dang, Dallin, you're like the .79 scan. That should be your Twitter name, dude. You're finding all these random names that fall into this category here. Here's your imbalance. I'll zoom in on it so you guys can see where I'm making it. I messed that up anyways. I gotta zoom in. Here it is. Boom. Yep. Here's another one. Oh no, it's not. You're flat there. Okay. Yeah. So there's your bullish imbalance right at the 0.79 fib. So 62 to 79% of the range. That is the golden pocket. You'll just notice that a lot of the time price will get down into there, especially when you don't have an imbalance at 50%. Um, so there's your 0.79, your deep discount. Um, and so far so good. To me, like, okay, like, so what would your criteria be for this trade? Well, let's take a look. And ultimately, we should, at the very minimum, just address this, because you're going to see that we took out this swing low with what price run? That price run right there. Okay. So from that high to this low, here's your bearish imbalance. Does the retracement get up into discount of the bearish price run and reject? Yeah. Look at that. Ready? High to low. We took out swing low with that price run. Retracement back up into discount, bearish imbalance, check, dump. There it is, Mando model complete. So then all we would do is just say, okay, now we can look to the next one. High to, whoa, low. Okay. All right, oh wait, hold on. Let me just get rid of this one for just a second. Oh no, wrong one. Shoot, right here. Just for so it's clear and they're not all overlapping. So with that most recent price run that we've had, obviously with the higher time frame, we are expecting a balance and a continuation from this point. But we should it wouldn't be fair to not address this. That's already been tested. This is untested right here. So price can get sticky around that 1530 mark just because we have an untouched bearish imbalance right there. So it's just at least worth noting, so that when we do get that bounce up into there, if you're taking shares or whatever, you can look at as a scalp, maybe trim the position, do whatever you got to do. But that would be the initial spot where you'd say, okay, maybe it's going to chop around for a little bit before. But ultimately, this does meet the criteria for a long-term Mando model right here. So I like that. I like this one. But again, this is the thing. You could say, oh yeah, I like this, buy here, and not a lot of these food rules. I will never say that, first off. Second off, when you get these imbalances and stuff, imbalance, bearish order block, bearish breaker, anything like that, you just have to go into it with the understanding that you're not just going to shred through those levels. It's very unlikely for that to happen. So with that being said, that's why I like scalping, because I can scalp it up to a level, look to reload on the retracement, and go again and go again, and kind of rinse or cycle, rinse, repeat, whatever the quote about that is. But yeah, this is actually pretty cool right here. I'm definitely not hating on Top Golf. I want to keep tabs on this one for sure. Let me just come on over here and see. I'm gonna add this Top G, or no, it's MODG. Whoops. Yeah, I love this place, man. This place is great. I'm gonna add MODG. I'm gonna add this one as well. What other one was pretty sick? Oh, I don't have Square on here. I gotta add Square. I wanted X out Neo, but I'm not gonna. All right, cool. So there's another one down. We got any more? Anybody else got anything? Let me see on the YouTube. YouTube's been popping right now. We're getting a lot of over here. Carvana. All right, we can look at Carvana. Let me just pop that up. I'm gonna do Dow too. Carvana. CVNA. All right, let's see. Ugh. Nasty. Okay, so obviously with hindsight, we know there was no 50% pop ever here yet, right? So let's go from high down to the low. Wow, that thing went to $3. That's crazy. Pretty good bounce so far, though. Sheesh. Okay, so that was the previous sell side liquidity that was swept. So that was a higher time frame liquidity. Um, so my question is, did we shift market structure? Did we on a smaller time frame? Ooh, we got relative equal highs though. Yeah, I think Carvana is going to 58. I do. I do. I do. I do. Here would be the first imbalance right there. I actually made a video on Carvana on YouTube if you want to go look. It was like $3, and I was, I was talking about uh, going along with it. I mean, it was a long time ago, so it's up now, but it wasn't like an efficient short term trade, I guess you could say. Um, See, now here's an example of where having a good understanding of price would really help you because I don't even know. I don't know if people would even consider this like quote unquote cup and handle, but I'm sure people who see this might say, "Oh yeah, that looks like a cup and handle." There's two things about the cup and handle though that are important to note, and one would be if that second high doesn't sweep, so if this doesn't come up here and shift market structure bullish, oftentimes this retracement down is not going to be viable. And that's when you're going to get those failed cup and handles, right? Everybody always says cup and handle. And then I never see the follow up tweet like, oh, look how perfect it was. But if you were to sweep that high and you get that retracement, what would that be? That's literally my model, right? When you have a ready, hold on, low to high, retracement back down into discount and high. The fact that we didn't sweep it here right initially, that would tell me that this is not a cup and handle. This could fail, right? But the fact that we left relative equal highs. So again, just like the what I'd said earlier with the whole double top, double bottom idea, um, the fact that they almost doubled down on this sucker. Whoever was short from here did not want this to go above, right, and sweep out those stops. Whoever was short up here on the second attempt did not want that thing to go higher, right? So, with that being said, this is actually pretty sick. I'm not gonna lie. Carvana's pretty sweet. Check that bullish imbalance right there. And yeah, 58 would be real sweet. From 58, you do have a couple levels, but again, these are not levels where I would look to short it because we are so deep in premium of this bearish range. We'd be overpaying for shorts in anywhere up to that 50%. So like these imbalances, anything below 50%, could it be a roadblock? Yeah, absolutely, but it would not be something that I would look to short because um, with time, I think you know, I think we can get up there. Dang, who would have thought Carvana? Jeez, but yeah, that's what I got. Some Carvana right there. Let me just slide it over, make it look a little prettier. But yeah, it's got a lot of resistance above, but again, I'm not so sure these are resistance levels that'll actually spur another down move like that. So let's see, we got any more requests here? Oh, thanks, Beaver. Let me check over here, see if we got any more. Uh, let's see, oil, U.S. oil. What's up, Curtis? How's it going, man? Um, wow, that was really weird. Sorry that they just kicked me out for a second. Um, I hope we're all good now. But yeah, Curtis, do you mind if we look at CL rather than US oil, just in terms of the ticker? Because I uh, I have that one pretty much charted, and it'll be really easy to go through. Um, James said, I used to be in the card business and their business model is horrible, not to mention that they can't make money. And the CEO's dad is a convicted felon for securities fraud. Yeah, I believe a lot of them are crooks. But But anyways, let's look at CL. Um, yeah, CL, man. I was wrong on oil. I'll be the first to admit it. I thought we were gonna get a bounce, and clearly we have not gotten a bounce. So I'll show you. It'll pop up in a sec. That was really weird. StreamYard kicked me out. I mean, I know I've been on for a little bit, but um, let's see. Oof. So yeah, here my expectation was, again, you have your discount retracement. There it is, your hold and your run higher. Look, we rejected here. Yes, I get it. We swept these highs, which to me it's just like what this move here is telling me is just choppy garbage, indecision, which is fine. But the overall trend, over time, like a lot of things, is technically bullish. Um, but one thing that I think is worth noting is on CL right here, we did get into this bullish imbalance here, and we've held that so far. And if we are to crunch this range, so what I mean by that is, instead of looking at the big picture, let's look at a smaller picture, right? With this price run higher here, right? We took out a high here, we took out a high here. We do have a bullish market structure. Ready? So from low to your high, here's your discount retracement, and look where we held, right at 79%, specifically the bullish imbalance here and discount of that. So I'm torn, and here's the reason why I'm torn. Do you see these lows right here? Relative equal lows. So whoever went long here, right, we would have to, with hindsight, of course, people who went long here, price went higher, right? Same thing here. But we did not sweep that low. So the fact that we did not sweep that low, all that's telling me is there is double the amount of money or liquidity chilling out right underneath those lows. So the market's job is, or I guess you could say the algorithm that delivers prices job is to go find more liquidity in order to move things around. That's the whole idea behind the market, really. So the fact that we did get down into here, that's decently promising. Um, but but we have a couple. There's a bearish imbalance right here. Here's another one, small, and it was a little sloppy, but we never got a disconnect from that level at all. Let's see. Here's another bearish imbalance right here, and that was previous support. So, but yeah, I mean, this is to me, it's kind of bounce here, or we're going below that 65, 64.59. So, I mean, the range is like $2.50, 2.5 points. So, but that's just the way I would look at it. This would totally meet the criteria for my model. Absolutely. The one caveat to that is, we do have those relative equal lows that are scary. And could we get deeper into discount? Yeah, I mean, it's possible, but you can keep it tight. I mean, check that right there. That's a bullish imbalance I didn't have on, but look where that wick came to. Ding. And go. So, here, let me just add one more. I'm going to favor this. Anything under 79%, I think, is a little too deep, and that's where it kind of gets scary. It's like, okay, yeah, the risk is really limited, knowing that 46 is probably your okay, this trade ain't working out, but I mean, just pretty big on the sucker too. So, oh shoot, sorry, whoops, I just saw you guys comment. I'll show it here. Sorry. Yeah, like I said, it kicked me out, so I had to re-enter, and when I did, it didn't show. At least you guys are listening and watching. That's cool. So there's my CL chart. I hope you guys can see it now. Ready? There it is. Should be popping back up right now. And can you guys see it? Oh, it's loading up. I see it loading up. Good. Okay, cool. All right. There is so there's oil. Curtis, I'm just sharing your comment on the top. Oh, Faith, you just missed. I had already talked about Carvana. We can go back to that one in a second. But yeah, let me just wrap up oil really quickly. So with oil, again, to me, like kind of do or die at that imbalance here at 68, 64. We lose that. I think the relative equal lows at 64.59 are next at bat. Um, and following that, I really wouldn't want us to get deeper into discount or it can get ugly. And that is really ugly if it goes down below there. So, um, but that's just the way I'm looking at oil. I think it's a lot of indecision on that part. To me, I'm happy about the cheaper oil and gas prices, but it seems like it's been too low for too long, and I'm just waiting for them to screw us over here. So, um, but so yeah, that's oil. Hopefully, I hope that helped a little bit there. Um, where is on Curtis? I don't know if it shows on CL, but there was three equal highs on the 1 hour on U.S. oil. Yeah. I'm not saying that I'm bearish by any means. I mean, look, like that's a pretty convincing bounce. But I guess I'm looking from like the doomer's perspective here, where it's like if we are to lose this imbalance, I think we're in some trouble. But that bounce is pretty good. Clearly shows that the weekly it did dig deep into this discount imbalance, but once we got into it, we escaped it and we actually closed outside of it. So um, yeah, really, to me, it's a risk high reward type setup here. But you know, again, what kind of name would you trade based off of that? That's the way I look at it. Like I'm not trading the futures contracts on oil, so um, yeah, I wouldn't use it. But all I know is that I do have CVX. It's just one of those that like I dollar cost average into for as like a long term Roth investment, and um, it's pretty much erased all the gains I'd had on it. So sucks, pain in the ass. But anyways, we'll go back to that Carvana because I know I guess a lot of people are really into Carvana. I'm salty. I made a video about it when it was like $3, and I think like 100 people watched it. But yeah, here's Carvana. This is on the shorter time frame here. It's loading up. Okay. All right. Yeah. So also, if you want to look at this from again like a really short term or tighter range right here, like check that. That's beautiful, baby. Low to high. Why that low? Well, that was the start of the price run. Um, you get that retracement down into this discount bullish imbalance right here and take off. So, I mean, look, the way that I am I don't want to say over cautious, but again, I would prefer to buy it on a red candle in terms of like just limiting my risk, right? If I were to buy it here and price then retraces back down into 35, which is still fair, right? Nothing changes. Really, nothing changes to me unless Carvana closes below 29. So that's a pretty big range. And the reason why I say that is because if we take out a low in that situation, I think we can get a bearish market structure shift and do the dance from there. Um, but the tricky part about this is I can kind of give you two perfectly good theses, whatever, however the hell you're going to say it, on as to why I think this could be bullish and why I think it could be bearish. This is why I would think it would be bullish. Perfect Mando model thus far. I would look for this to get shredded up and move towards that 58.05 buy side liquidity. Where I would say, maybe not. And the reason why I do favor the bull side is because we didn't take that second high. So we do have relative equal highs here. We didn't sweep liquidity yet. So that's why I would lean more towards the upside. But on the flip side of that, here's just a bearish perspective. It's not, I don't really favor it, to be honest with you, but taking out this low right here with that price run, that's actually a bearish market structure shift on an even smaller time horizon, right? So there would be your bearish Mando model setup here. If we were to sweep this high here with this candle, which we did not, but if we did, you would have this would be a bearish breaker, and I would look for price to reject off of here. But the fact that we did not sweep liquidity up here, I would not favor that this move yet. So price could get up into here and then retrace back down into this bullish imbalance here before that move up higher. But I would still favor the bulls in this situation, to be honest with you. Um, but you see how the market is, it's fractal, and what I mean by fractal is if you can break this thing down into 100 different price runs and kind of come to a different conclusion. For example, this price run is bullish, this one is bearish, this one is bullish, this one is bearish. This overarching, yearly range or higher time frame range is bearish as can be, right? So everything really is fractal, and a lot of the times it depends on how tight of the range you're going to look at, and what type of trade you're going to take off of this, right? You could say, yeah, I'm going long and I'm going to hold this thing for a year, and I bet you I'll be right. And I would say, yeah, you probably will be right. But in terms of, like, if you were to take a next week expiration, I would, I wouldn't do that, because you know, anytime you get into some sort of imbalance, it can take time. And when it takes time, it chews up your contract so bad. And even when you're right, there's a chance that you A, lose, or B, just don't make nearly as much as you should have. And that's so frustrating for a trader. I've been there, trust me, many, many times. It stinks. So that's the difference there on that, on Carvana. Um, for the whole month, I'm sorry, I'm just oh, Curtis, you got it, man. So this is Fati who brought this up. Bro, can you check Carvana, the monthly bearish imbalance, not only the weeklies? Do you think this will act as resistance? So if let's turn this up, we'll go to a higher time frame here and check out this monthly. Here we go, 1 month. We closed above the monthly. Oh, you're talking about this one. You're talking about this imbalance right here, right? Yeah. Well, here's why I would not favor that, Fatih. Here, ready? Boom, boom. Could I be wrong? Yeah, sure. I've been wrong before. I'll be wrong again. But the reason why I wouldn't favor this imbalance holding true is, one, we are so deep in premium of this bearish range from all-time highs down to where we are right now, right? So buying shorts down here it's a little risky. You're kind of playing with fire. Two, we completely filled this imbalance here, rejected, right? But the fact that we filled it, and then look, we came back up again and we rejected it again. This price range to me is as balanced as we're going to get. Also, if you take a look at the monthly, I know there's a lot of levels on here right now, so it looks a little sloppy, but if you were to look at it like this, we held on to the monthly bullish imbalance. So the fact that we held on to the monthly bullish imbalance, and actually next week we can create a bullish balance price range where, I'm sorry, it's really sloppy, but I'm going to show you anyway. This was a previously bearish monthly imbalance right here, but look at the candle that we made. To me, that's pretty bullish. So next week, I'm going to do it right now, and we can have some fun with this. I'll give it a go. See at 38. Let me just add alert 38.24. So I'll set this alert. If it triggers, great. If I miss it, oh well. But if price comes back down into the inverse and it takes off from there, that's awesome. But what's my risk? My risk would just be the low at 36.47. So I'm risking what? Not even $1.80 for a potential 18-point run. That doesn't seem too crazy to me, right? I'm cool with taking losses. I'm okay with being wrong every now and then. It's a part of the game. But as long as I respect what I have set for my risk, that's why I'm able to survive in advance, right? You see all my futures trades that I take, right? I lose on some of them too, but they're not the flashy, oh my God, he lost 10 grand on this trade. Ha ha. Like it ain't like that. Like my risk parameters are typically between $200 and $400 on the trade. So even if I lose 2 in a row, if I win my third trade, which and my targets are typically, it's not monetarily based, but they typically end up being somewhere between $1,000 and $1,200. And if they hit, not only did I just erase the 2 stop outs that I had that were very controlled, but I also made money. So that's the way I look at it. I recently, over the last sheesh, since July actually. I just posted like the uh, win rate on my trades in the account, and I'm still losing like 30% of the time. But the fact that I'm able to limit the damage on that 30%, that's what's allowing me to um, really continue and make some pretty good strides forward. Um, but yeah, so that's just what I have set. So let me just see if I can pull up these. There it is. So that's just you know Carvana crossing 38.24. I would give it a whirl, but that would just be a monthly balance price range, and that would be sweet. That would to me be a good indication that we get up to that 58.05. Um, but that's just my take on it. I could be wrong. I've been wrong before. I'll be wrong again. But I don't know if I screenshotted Carvana, but I'm going to right here. Whoops. This should not be there. Good. Okay, so I'm gonna just do that. Bingo. All right. What else? We got any other names? I gotta just check over on this thing real quick. Let's see. Oh, Jill said Snap. Yeah, we can absolutely look at Snap for sure. I'm talking about the small volume imbalance at 41, bro. It seems to respect it on Carvana on the monthly. Hold on. Let's see. Oh, very, very small. You're right. But listen, the fact that we respect it and not and so far we're balanced price ranging in this bearish monthly. The fact that we close above it, I like that. To me, that's pretty good. And you can look at this from multiple different perspectives. Right now, I have the daily level set. How about we set the monthly discount? Bingo. Could we come back down into here? Possible. Where you get a rejection here, you look to get down one more time into discount and move from here. Sure, but I'm willing to take the risk on a $2, $2 trade or risk parameter, I guess you could say. So that's Carvana right there. I'm gonna wrap that. Oh, Surface, what's up, man? Let's do Snap first, and then we'll do CVX, and then Steve, I'll get to yours too as well. Katie, yo, oh yeah, no, yeah, no problem, Fatih. I hope I'm saying your name right. Sorry, man, if I'm not. Let's see. What were we looking at? Snapchat. Okay, another one I probably don't have charted out here. But yeah, KD, no, I wasn't doing anything, and I figured I'm just gonna get all my stuff done, so I I don't have to do it later on in the week. But okay. So obviously Snapchat, we're way down from all-time highs, but let's just take a look. And let's see. Okay, market structure shift here. Here's your low to your high. Here's your retracement. Ooh, sloppy, but here's your discount imbalance right here. Mando model complete. Discount retracement. Run for highs. So right now on Snapchat, to me, the likely draw, I think you'll get here 1655, and upon that sweep, so it would be something like this from ready, low to high. Is the range set? I don't know. I think we probably get up into that first, but if we do get up into that 1655, the range would look a little more like, let's just say it just gets there, right? 16. Well, I'm not saying that it gets there, but if it were to get there, then I would look for a retracement back down into a discount imbalance, which would be somewhere in here. One. We got any more? Yeah, we got another little one right here. Bingo. Whoa. Come on. What are we doing? There it is. Boom. And do we have another one? Not there, but we have this one right here. We just actually created a weekly bullish imbalance there. So yeah, there's that's Snapchat. Obviously you're gonna start running into some serious resistance up here. So here's your first level of resistance from that high to here. That would be bearish right there. Boing. Here's another bearish level right here. So you're gonna start running into a lot of bearish levels, but let's just see from those most recent highs. Where are we? Yeah, so even from this initial high move, you notice this a lot on like small caps, mid caps. Like we really never got a bounce before the next dump. Like on all of these little candles, there's no 50% retracement at all. I don't know what the all-time low is, maybe $7. Yeah, but 50% of the range is $45, and you do have a bearish imbalance right at that level without anything. So is the range set here? I don't know, maybe. I would say yeah, with the fact that we've created multiple imbalances and actually respected them too. But um, but yeah, that's Snapchat. One thing that I'm picking up from this or charting these names is that a lot of people are looking at names that I would never look at, which is crazy. Um, not a good thing, not a bad thing. Just an observation. It's kind of funny. On the 5-minute QQQ today, I ran into the same bullish bearish arguments late in the afternoon. Okay, so this is a question from Steve. I could pull it up. We'll do. I'll just come over. I'll do it on here. This is just my Nasdaq chart, but I'll pull up QQQ. All right, so let's go QQQ. We'll go 5-minute on that, and we'll see. So what I'm guessing, Steve, was that you were kind of able to justify um, uh, either direction, if I'm not mistaken, and you're right. So I would urge you to check out the idea of the power of three. If you shoot me a DM, I can send you a YouTube video on it, but it's where you get the accumulation, manipulation, and distribution. And towards the end of the day, we were just kind of chopping around. But I got to be honest, I'm not as positive if it happened on Qs, but I actually had a killer trade on the Q or on NQ towards the end of the day. Um, but let's just take a look. So we took out these highs here with that price run. Let's just see if how well Q's played in comparison to what. Yeah, okay. It's the same. So let's just take a look here. So we have this low to that high because that high took out these highs right here. This price run right here took out those highs. You get your retracement where discount, bullish imbalance right here. Whoopsies, bingo. There's your bullish imbalance, and there's your run for highs. Your Mando model is complete here. Okay, so the fact that the model is complete there, we move on. We'll go from our new low to our next high here. Here's your retracement back down into discount, and oh boy, here we go. Ready? Little non-farm payroll fun. Ready? Retracement into discount, bullish imbalance, pop, but no sweep. I bet you if we looked, SPY swept here. Just a guess. And you got bearish SMT divergence. There's your retracement lower. Get a little deeper into discount from this point. And once you got one more time, and this is the trade that I took right here, right off the 79% retracement in discount of a bullish price range, and we took off. Took forever. I actually took my money here on NQ. It was like $1,200, but it was just taking forever, and the fact that it took forever. I actually have that video on my Twitter right now if you want to check it out. I cut it up, this exact trade, and it looks exactly the same as it did on the Qs. So but it was just taking so long at this point here, and while I did have my stop, I was kind of trailing it candle by candle. I would have ended up getting stopped anyways on one of these two right here, but which is fine, but I just took my profit because I didn't really feel like watching it anymore. I had a really good week this week and didn't feel the need to do so, especially when price slowed down in the afternoon after a pretty volatile morning. To me, the PA, it kind of made sense that it slowed down towards the end of the day as a result of that. So What else we got? Yeah, I still like AI, man. 5 years. I'll show you my AI chart. Again, it had that funky. I don't even know what happened. I think it was earnings, but look what happened. Didn't care. Oh wait, I can't look at this on the 5 minute. Yeah, these are my higher time frame levels on the 5 minute. Let's go over here. Hold on. AI. Yeah, AI. I got some high hopes for AI. Think we could squeeze this sucker. I've been chilling in it for a while now. Let me come over here. I'm gonna pull up my first tweet on AI. AI. Oh no, we gotta go money sign AI and then at Mando Trading, and I'll just pin the tweet onto my chart so you guys can see it more clearly that way. Now let's see. Here's AI. Let me just go back to the tweet. It was like a month or so ago. Where is it? Let me see. Where's the first one? Where's the first one? Yeah, no, a little lower. Trade setup. Yeah, here we go. Here it is. AI, beautiful. Dang, 18,000 people took this sucker. Yeah, from 24. That was the initial entry on that. But let me just get the link to it. Sorry, it's taking a little bit. Bingo. Copy link. And let me just put it on the chart here. Again, that's why I like to just put it in writing, and that way I can go back instead of just saying I told you so. There's actual validity behind it. So off of oh yikes, I didn't want that. Here you go. I'm gonna try and make this a little bit prettier right now. Hold on. There it is. Boom. Okay. There's the tweet. $1 risk for 8 to the upside. And we were pretty dang close to that, but yeah, I mean 48 would be awesome. I think that's probably where I'm gonna look to take profits if we get up to there. But I've if I go over to the daily and I show you my daily, that's where I put like where I took profits and stuff. Where are we? Here it is. Oh, come on. SoFi has been a sweet trade, Katie. I know you're in that too. Oh yeah, so basically the way I look at it is I'll scalp NQ all day. That's the game plan. I'll take a couple shorter duration, like option swings. So right now I have Tesla and Netflix, and then on what's it called? And then for shares, I trade a lot of the names that I post over the weekend. So, but yeah, I already scaled out twice, and I don't really have that much left, but I would love to see 48. That would be so sweet. That would complete my model on the higher time frame, like that. Because the first one, if we go back to the first one and we just, oh, whoops, no, I need that over here. One sec, ready? From low to first high, you got your 50% retracement. Great, there you go. Here, boom. There's your retracement at the discount. There's your new high. Mando model complete. So, yeah, I would love to see the model complete up there. That would be so awesome. But we'll see. Again, that's why I the way I scale out on the shares is I usually go heavier as I on the smaller amounts and just kind of try and build in a free position if I can. So that's what I got on that. Oh, nice. I got it. All right, cool, Fatih. Yeah, I feel working finish final. Nice, Katie. Let's see. What else? All right, I'm gonna take just a few more here. I do not think Palantir is heading to 13. I think it's gonna go higher too. I bought shares of it 2 days ago actually. Here, I'll show you why. Um, Here's what I think. And again, I'm not always right. I promise you, I'm not always right. But no matter what the trade or idea is, I just like to build it or build my idea in a way where I can justify it. If I'm wrong, so be it. It is what it is. But as long as I can come up with a reasonable explanation as to why I believe that it's going to be going one way, that's fine. That's good enough for me. And I know where I'm going to take my loss. That's another thing. If you know where to take your loss, it's a huge, huge step. So just first and foremost, I'll show you. Um, we actually completed my model already. So this would be the retracement of my model. So here's your low. We took out multiple highs with this price run. Here's your retracement down into discount, specifically 50%. Even more specifically, a bullish imbalance right here. There's your run for the high. Once we take out the high, Mando model complete. Now we move on to the next. So I'd go from our low to our new high. And bada bing, there it is. So you have your oh wait, hold on. It shouldn't even be that. I'm sorry. It should be here. Um, from because we didn't take the high here, right? So the fact that we didn't take the high here, to me, that just tells me like the range is not set. Um, so it should be from here. This is the price run that took out that high. There's your retracement down into discount. And the fact that we got down into discount and we kind of immediately bounced, I like that. I'd like to see 2185. Now, if we were to zoom out on Palantir, this is another reason why I think we can go a little higher. If we were just to go from this most recent, where is it? No, this one was already a Mando model. High to low, retracement into discount right here, dump. So here to here, there's your first low, no 50% retrace, no 50% retrace. We are actually in discount right now. I'm glad that I looked again. And we're right around here. So we would shift market structure over 27.11. And that would be like pretty dang bullish for Palantir. So, but yeah, I don't like how there's relative equal lows. I know that was something that our buddy Ryan had brought up. Relative equal lows right here. It doesn't need to come back down and sweep those first before making that next move higher, possibly. But just the way I looked at this trade was taking it. I bought it the other day off the 62%, so it's up 30 cents. But if we're to close on the weekly below that 1693, I'm probably going to get out. Just really like a 40-cent risk for a $4-5 win. That's the way I looked at it. So, but I can see both ways. Do I play FOMC? I don't like front run it. I just wait until it happens and then I can play after it, if that makes sense. But yeah, front running it, it's just you're just praying that you hit right in the right direction first. You can usually get a pretty good idea as to where price is likely to draw to if you were to map out your higher time frame highs and lows. But typically you'll get the higher time frame sweep, and that's when you get the reversal. So that's what I wait for. I try not to guess that first direction. But let's see. On the 5 minute SPY, the 9:15 candle sweeping the 4 9:15 sweep of 740 was bearish. 630 low was bullish. Steve, if you want to just screenshot your chart and shoot me a DM, I'll get to it after. I'm struggling to follow it this way. Oh, I'm glad you did well. Oh, nice. Yeah. SoFi's been cool. Okay, so I'm looking for. Yeah, no, I used to try and play the pre FOMC candles, and they just always would crap on me. So I just don't do that anymore. Um, there's just no need. You can make money after the fact. All data that comes out after the fact, usually the trade setups are beautiful. It's just when you try and front run it to get that big first move, it's usually when you get hurt. All right, let's look at one more. Unity. I just saw Fatih just said Unity. Let me look at that one for sure. Here's Unity. Okay, so Unity. Okay, so you got the higher time frame sweep right there. Just looks like it's making U's, man. um, yeah, it's not too bad. I remember when this thing was all the way up here. That was crazy times. Let's just map out like where 50% would be of this range. So from high to all-time low. Yeah, we've kind of just been cruising. So worth noting, 115 would be our midpoint, um, or our 50% or equilibrium of this current range. Now, with the sweep here, we have to be aware that this could potentially set up for a bearish model, right? But the low that we took, and we are looking at a weekly time frame, so could very well be a sweep, but we need to identify that at the very minimum. That would be a bearish level right there. You also have this. Where's the wick? From wick, oh shoot, boom, to here. Look, either side of that candle does not have a wick, so we need to view that as resistance as well. But here's the thing. So did we do it here? Hold on. Oh, come on, what are we doing? Ready? From high to low. Did not get a 50% retracement. So from right here, bang. So if we are to get up above this level here at 40, I'd want to see it get above it and then use this candle right here, this green candle, as support. That would create a bullish breaker, and that typically would give you just another level to trade off of, or another level to base your idea behind, right? So if your entry would be a retracement into 40 and your stop loss is at 36, now you have a controlled risk of $4 while looking to the upside for 10. Does that make sense to you? Maybe, maybe not. Or up to that 58 buy side right here. So just a couple ways I like to look at that stuff. But we could very well just get up into here 50% and puke. So really, I would not look to do anything until over 39, 49. That's just me though. Everybody's different. But cool, Steve. Yeah, no, I'll definitely get to it. I got you. And oh, thanks, man. I'm glad you pop in for sure. Can we use the small weekly bullish imbalance as risk and long from here? If we look, all right, we're back on Unity. Where's the? Oh, you're talking. Yeah, so right here. Hold on. Right here. You're looking at that, right? Yeah. I mean, look. Can you? I hate to say it, but can you try every single level that's on this chart? It really, yeah, you could, as long as you respect where the stop is going to be, right? Um, that's the biggest thing. Like, if price were to retrace back down into here, your risk is only, or it should only be like 70 cents. If it's only 70 cents, that loss is not going to hurt too bad. But you have to respect it, and a lot of people don't do that. I used to not do that at all, and really, once I made the transition to trading on futures and having the ability to put the stop loss right on the screen, total game changer, because now I don't even think twice about it. I put my stop loss here because I think this is where the trade goes to, you know what, and if that happens, then I'm out. I take the loss. It's okay. It's not going to be a huge one. I'm not going to let it get out of control. And I used to have those where you just get caught in quicksand and you keep hoping the next level is going to be the one to hold, and it just doesn't. And that's where things get a little funky. But anyways, all right. I think I'm gonna shut it down here. But um, I appreciate everybody popping on. How do you feel with big gap down sell-offs like Upstart when marking levels? We're in a big resistance zone at any time now, aren't we? Yeah. So once I shut this down, just we had talked about Upstart. I don't know if you came in late or whatnot, but you could totally, we spoke about it. So you'll see what I was thinking about that one. So, but anyways, uh, thanks to everybody who popped in. It's cool, man. We got a lot of people throughout. Yeah, definitely. If you have any questions, just shoot me a message on Twitter. It's cool. Yep. All right. Yeah, guys. Take care. Well, all these charts will be on Twitter tomorrow too. So I'll talk to everybody next time.